Auzubillahiminash-shaytanir-rajim. Bismillahir-rahmanir-rahim. Rabbi shrah li sadri wa yassir li amri wahlul 'uqdatam min lisani yafqahu qawli. وقال الله تعالى في شأن حبيبه إن الله وملائكته يصلون على النبي يا أيها الذين آمنوا صلوا عليه وسلموا تسليما اللهم صل على محمد في أول كلامنا اللهم صل على محمد في أوسط كلامنا اللهم صل على محمد في آخر كلامنا. Dear students, today we will discuss about accounting principles. Hope my screen is visible. First of all, you must understand that accounting principles are as important for accounting practices as blood for human body. You know very well that without blood no human can survive, same as there are no accounting practices without accounting principles. So let's get started. Generally accepted accounting principles. The common set of accounting principles, standards, and procedures. These provides a fair market image of a company. These provide information about revenue recognition and balance sheet item classification. When we are talking about accounting principles, which is generally known as a GAAP, generally accepted accounting principles, these are divided into two classes. You can say there are two types of generally accepted accounting principles: accounting concepts and accounting conventions. First of all, we will discuss about accounting concepts, and you know what is the meaning of concept. Here, the accounting concepts are the certain basic assumptions upon which science of accounting is based. So, accounting principles are rules and guidelines adapted for recording and reporting of business transactions. So, you know that each and every business organization maintains the record of the business transactions, and also they prepare various accounting statements. So, it reflects the financial position. So, while preparing the reports, they have to follow these rules and guidelines. So, here is the question that why do we need these accounting principles? My dear friends, the answer is these are to ensure the uniformity in the accounting system and also makes it easily to understand, so a person who has the basic knowledge of accounting can easily understand, because these principles are followed worldwide. So there are several accounting concepts. Almost these are add to 10 accounting concepts: business entity concept, going concern concept, dual aspect concept, cost concept, money measurement concept, accounting period concept, realization concept, matching concept, accrual concept, and vice versa. So the first concept is a business entity concept, and according to this concept, business is treated as a unit or entity separate from its owner, and what amount invested by proprietor is shown as liability. Amount paid for personal expenses of proprietor are also shown as drawing from capital of proprietor. So my dear students, business entity concept is basically It also known as separate entity concept, and as per this concept, it is assumed that business has separate and distinct entity from its owner. Here we know that meaning of entity. You know that entity means anything which has its own existing. So as per this concept, it is assumed that business has his own separate existing, and business and businessmen are different from each other. In simple word, business is totally separate from its owner. This assumption says that only the transactions which are related to the business are recorded in the books of account, and personal transaction of owner should not recorded in the books of account. For example, businessman purchase a car for his personal use and also use it for the business purpose. It cannot be recorded in the books of accounts because it's not a business asset. While businessmen purchase a car for a business purpose and also use it for and also use it personally, it must be recorded in the books of account because it's a business asset. So, my dears, must remember that personal transaction of owners are not recorded according to this concept. Even transaction between owner and business need to be recorded. For example, owner makes the investment in the business, that's need to be recorded. Owner make drawing out of business, they can be recorded, but only the personal transaction of owner cannot be recorded according to this concept. Hope you understand about separate entity concept or a business entity concept. The next principle is going concern concept. And going concern concept means this assumption is that business concern will continue for an indefinite period. Enterprise will not cease doing business, it will not sell off its asset nor look for liquidation. Remember one thing, uh, whether I should just tell you one thing, you have not listened that anybody saying that I am going to do business is only for 1 year. Have you have a thought a person ever saying I am doing this business to for 5 to 10 years? After that, I will stop it. I think your answer is no. Have you ever listened that somebody saying that this business is mine? If I die, do not give to my son or my brother, etc. Have you heard? Of course, no. When you start the business, do you have the insurance that it is going to run forever? That's another scenario. And here also the answer is your answer must be no. So, going concern principle is a concept that says it is assumed that whenever somebody start a business, it will be run forever. So you are thinking that what is the logic behind it? So the reason is when we are having our fixed asset like machinery, building, plant, equipment, our asset we have to show it every year at their true price. True price means we have to charge depreciation on them every year. So today, if you buy any machinery, any car, let's say you purchase some car for $50,000. The $50,000 is the car price, so that will not the same price for next year. The value will decline. So how much value is declined after that in your books? You have to show it at its fair value. Hope you understand that business is started with an assumption that it will run forever. Therefore, fixed assets are shown at true value every year after depreciation. Moving toward the next principle, and the next principle is a dual aspect concept. According to this principle, every transaction has two aspects, and both the aspects are recorded in the books of account. One is debit another is credit with equal amount. So here it means that if we are receiving any benefit, we have to give certain benefit of equal amount. So this concept says that each and every transaction has two aspects. One is debit aspect and other is credit aspect. Because of this concept, accounting equation is originated asset is equal to liabilities plus capital. So we know that every asset has debit balance and capital liability and capital liabilities has credit balances. So when we add up liabilities plus capital, they both have credit balances. So when both are added, we get certain credit amount, and asset have credit and asset have debit balances. So the debit and credit of the organization will be matched, and the balance sheet will be tallied. Or we understand this concept. The next principle is a cost concept. My dear students, this principle, also known as historical cost concept. According to this concept, the assets which are acquired by a concern are recorded in the books of account at cost price. So, what is cost price? Cost price, the price which is spent, or you can say which is spared for the acquisition of an asset. So, it is also known as cost of acquisition. So the amount spent to purchase an asset is known as cost price. So as per this concept, assets are as per this concept, assets are need to be recorded on the cost price. The market value of an asset cannot be recorded. Must remember, the assets are need to be recorded on the cost price. We ignore the market value of an asset. Assets are not recorded at market value according to this concept. You are thinking, what's the logic behind it? Now, just understand that the depreciation of a, we charge depreciation every year. Depreciation, the fixed assets are depreciated every year, and depreciation can be provided on the fixed assets. So cost of the acquisition of an assets are related to the past. Hence, it is also known as historical cost concept. Hope you understand. Moving toward the next principle, and the next principle is money measurement concept. According to this concept, only those transactions are recorded which can be expressed in monetary terms. For example, an efficient dedicated measure is definitely an asset to the business, but since the monetary measurement is not possible, so it is not shown in the books. As you can say, uh, let me yes, we are talking about money mere concept. So this concept says that only the transaction which can be made in term of money, only those can be recorded in the books of account. Other transactions which may be important for the business, but if they cannot be made in term of money, they cannot be recorded. For example, I will tell you the example earlier that an efficient dedicated manager is definitely an asset to the business, but since the monetary measurement is not possible, so it is not shown in the books of account. Moving toward the next concept, and next concept is accounting period concept. It is necessary to know at frequent interval how things are going. 12-month period is usually adapted for this purpose. This time period is called accounting period. Uh, My dear students, accounting period concept, or you can say periodicity concept. Life of business is definite. As per going concern concept, we assume that every business has indefinite period of life, but indefinite period of life is divided into periodic intervals. Each interval is known as accounting period. Hope you understand. So life of the business is divided into certain periods. So each period is generally of 12 months. Generally, it starts from 1st of January and ends at 31st of December every year. It may be different in certain cases, but generally the accounting period of 12 months, that is from 1st January to 31st December. So in these 12 months, the accounts are made and maintained, and at the end of accounting period, financial statements are made. Profit and loss account and balance sheet is prepared to know the financial position of business. Hope you understand. Moving toward the next principle, and the next principle is realization concept. A realization concept is about revenue is considered earned on the day. Transfer goods to customer in exchange of valuable consideration. This is of great importance in stopping business from inflating the profit. The accountant usually use debts. My dear students, revenue is considered earned on the day means revenue is recognized only when a sale is made. No sale can be said to have taken place unless money has been realized. Example, cash have been received. As per this assumption, the sale is considered to be made only when the cash is received from the customer. For example, you are selling certain goods to a customer and he tells you that he will pay the amount that is cash in future. So he immediately doesn't pay you any money. So then you cannot consider it. It has cash and recorded in the books of account only and only when you receive the cash from customers. Then the sale is considered to be made, then you record it in the books of account, right? So just remember, just learn a simple point uh, of this assumption, that we assume that sale is considered only to be made only when the cash is received from the customers. Okay. The moving toward the next concept, and the next concept is matching concept. Profit is the most important factor of the to the for the businessman to keep the business activities. Revenue and their related expenses in the same accounting period. The purpose of matching concept is to avoid misstating earning uh, for a period. According to matching principle, the revenue of given period should be matched with the expenses of the same period. Okay? So revenue and expenses of the same period should be matched up according to this concept. The net trading profit of a business is calculated by matching the total amount of revenue is earned during the given period with the total amount of expenses earned during the same period. So for a particular period, revenue and expenses are matched, right? Then we a certain profit. So here we need to remember that the revenue and expenses only for a particular period are need to be considered. For example, in profit and loss account, we take outstanding expenses on the debit side, right? But we do not take prepaid expenses. So outstanding expenses related to 1 year, you know it very well, but prepaid expenses may relate to next year. Hence, only for a particular period, the expenses of the revenue are to be taken into consideration. So, my dear students, these are the some principles. Hope you understand these some concepts of uh, generally accepted accounting principles. If you have any problem, any query, feel free to discuss with me. Uh, Moving toward the accounting conventions in accounting principles, and there are four main conventions which are given in the generally accepted accounting principles: the convention of consistency, convention of full disclosure, convention of conservatism, convention of materiality. Convention of consistency. Accounting method and policies remain same for one period to another. Circumstances changes become necessary, so the change should be stated clearly. Dear students, there are the several methods in accounting. Like there are several depreciation methods to charge depreciation on fixed assets, like straight line method, like written down value method, like dimension balance method. Same as there are there are different methods to record the inventory, like accrued inventory system, like perpetual inventory system. So, according to this convention, when we uh, when we adopt one method for accounting practices, we remain constant to practice that method. We do not we must be constant to that method. We do not change that method. Like if we select an accrued inventory system for inventory recording, then we will consistently follow this method. It's not possible that for 1 year we are following perpetual inventory system, and the next year we will shift at accrual inventory system. Or you can say, for the depreciation of assets, you select satellite line method to depreciate your assets, and the next but on the next accounting year you shift at declining method, balance method, or written down value method. The convention of consistency doesn't allow you, so you must remain same for one period to another in your accounting practices, in your accounting methods, and in your accounting policies. The other convention is the convention of full disclosure. Financial statements and their notes should present all information that is related, relevant, and material to the user's understanding of the statement. Convention of full disclosure means that there is 100% disclosure of facts, right? Everything which is relevant and material to the users should, must be you must present that information to the users which is relevant and material uh, to the business stakeholders. The other convention is the convention of conservatism. Losses are recorded when they are expected to occur. Gains are only recognized once they are certain to happen. Example, they have earned. This is done to asset and revenue are not overstated. Liabilities and expenses are not understated. The convention of conservatism, example, applying conservatism losses, a business on inventory that has brought for $12,000, it has gone down in value and is now worth just $8,000. Example, applying conservatism, same in the cases of gains, a business on a building that originally cost $5 lakh, but growth in the property market means the building is now valued at 6,000, you can say $600,000 if were to be sold. Hope you understand. The next convention is convention of materiality. Only those transaction important fact and items are shown which are useful and material for the business. The firm need not record immaterial and insignificant items. Example: company XYZ Limited bought 6 months supplies of stationery worth $600. This amount is so small or immaterial it can be expressed of in the next month instead of expressing it in the next 6 months. So that's all from today. If you have any question, please feel free to ask your questions.